Today is March 22nd, 2025. This is like my third time trying to record this video. But anyways, Friday I was basically flat, but it was still a pretty volatile day. Well, it was a volatile week and volatile month in general, but I did swing like a whole $7,000 just on Friday alone, which is pretty crazy. It's still year to date, I'm only down 0.97% on a year that the NASDAQ is down 6%. So even though my account is much more volatile than perhaps the market, I'm still outperforming it. So it's good to see. I think where we left off in the last video is my Russell put credit spread. So after the put credit spread, I did end up putting 35 cents into one of their new event contracts that Robinhood has. I'm not going to lie to y'all, I don't really care about sports or basketball. So the whole college basketball, I think that's what it was. But whatever else the event contracts are, didn't really excite me too much. But I did decide to go ahead and put 35 cents into will the target Fed funds rate be above 4.25% in May 2025. And of course, I put 35 cents into no. Pretty excited about this whole event contracts thing. Even though it's not at the top of my list at what I want to see at Robinhood, it is interesting to see how they're diversifying and just giving more options and possibilities to Robinhood users. I don't really know how good this is for Robinhood though, because if you take a look at some of the other event contract betting platforms, one that sticks out to me from last year was when former President Jimmy Carter passed away. I think it was Polymarket or one of these other platforms where people were actually betting on whether or not Jimmy Carter would die in 2024, which is kind of dark and sad, but also funny in a dark, twisted way. I think he died the day before New Year's. So as, of course, the year was coming to an end, those contracts were losing value. And I think it was like 99% to 1%, the odds. And then boom, literally the day before New Year's, he passes away. And those contracts just gained all of its value back, which was pretty insane. If any of you guys bought those contracts, you're like super rich now. But what I'm trying to say is, I don't know if Robinhood should get into that because it is pretty controversial. And like I said, it's kind of dark and depressing to actually bet on moments like that where someone is actually passing away, no matter what your politics are. I just don't know how deep Robinhood is actually going to get into this, if that makes any sense, and if there's going to be any future consequences. So I'm not really expecting this to be a huge growth thing for Robinhood. It's just kind of one of those marketing things where in the moment it's like, hey, if you download the Robinhood app, then you can bet on the college basketball game or this football game, or maybe when there's like another big fight, a boxing match, whatever, or another election. Like Robinhood can start pumping into marketing and go, hey, if you download the app, then we'll let you bet on this event or whatever. So I think it's going to be more of a marketing thing rather than a revenue growth thing, but we'll see. And of course, later on March 17th, I got my very sad Google dividend. But then March 18th, I did increase my position in Honest. I'm really liking the setup here. It's been consolidating around $5 for like ever now. And I'm expecting it to pop to $10. So we'll see. And of course, after that, I did get another very sad dividend from EA. It's only $3.80. But then later on in that day, I did end up paying my Robinhood margin interest. And I also deposited $500 more into my Roth IRA. And even though I do have margin on my account and that $500 should go to paying off my margin, we're getting closer to that deadline of being able to deposit into my IRA for the year of 2024. So because we're getting closer to that deadline, I just thought it'd be smart to just put a little bit more into my IRA because I kind of neglect it. I don't really pay too much attention to it. So I just wanted to basically put a little bit more in and feel better about myself. I don't know if it's the smartest thing to do, but I did it. And of course, I got another pretty sad dividend from VF Corp. But then I ended up rolling out my cash secured put on Nike. And if any of you guys have been paying attention this week to earnings, you'll know exactly why. Because Nike went from like 75 to 65 in the same week. And even though I did say that I don't mind owning shares of Nike at 76. I decided to roll it out instead of get assigned shares because I don't want to pull another $7,000 in margin to own another 100 shares of Nike. So I just decided to roll it out a little bit, see where the stock heads. But yeah, my price target on Nike is still $100. I know it doesn't feel like it after this week, but I do think they could still recover as a company in the stock price. And of course, none of this is financial advice. This is just my opinion on what I'm doing personally. But when it comes to the market sentiment and just my future outlook in general, I am still kind of cautious of where the market is going to go in 2026 and 2027. The reason why I'm not super cautious right now is because, well, everybody else is. Understandably so, because a lot of stocks have taken a nosedive, and me personally, coming from peak at 170 all the way down to 120, I mean, that's a 50K drop. So I am feeling the pain, of course, but I just don't think I should be bearish when everybody else is already bearish for me. I think put volumes are sky high right now. The VIX spiked, but I mean, it's back down, I think, right now. But the VIX also had a spike. And of course, the market dropped a lot. And just the sentiment in general on YouTube, on X, anywhere I look, it's just people are mad at the market. Basically, what I'm saying is, I don't think right now is the best time to look for hedges or try to sell stocks. You could argue, yeah, back here whenever my account peaked at almost 170, that was the best time to hedge. And I did hedge a little bit, mostly on Palantir, because I sold those 2 covered calls and I made $500 in cash that 1 month. I think it was last month. And obviously $500 on a 170K portfolio is not much of a hedge. So I should have hedged a little bit better, but I'm not going to cry about it now and sell covered calls now at the bottom, or what I think is the bottom, and then have stocks swing back up and all my shares get called away, or buy puts right now and they all end up expiring worthless because everybody else is already buying puts and those puts have already gone up so much in value. So I don't think I should be bearish when everybody else is already bearish. Short term, I do think that could be one of the reasons why the market has a little upswing here, because everybody is already expecting recession and market crash. But 2026, 2027, we'll see. I'm going to have to start getting a little bit more serious when it comes to hedges. But at the same time, I don't really mind the volatility.